very important things to talk about impacting a lot of Canadians, and that is the bank of interest, or rather the interest rate from the Bank of Canada. A lot of people concerned about this. Is that justifiable, do you think, these concerns?
I think some people are feeling cheated, Todd.
Yeah.
Just like what, Abba was going on about. Canadians are drunk on cheap money.
Yeah.
I heard...
Whose fault is that?
I think the Bank of Canada is not at fault. They lowered the key overnight rate when the pandemic first struck to put really liquidity into the market. Canadians needed a helping hand. And now inflation is like a runaway train. And some banks and probably some consumers think that the rates are going to the moon. I can tell you right now, they're not. Historically, borrowers do better in a variable rate.
Yes.
And right now, if you're very curious to know where things sit, a fixed rate today is somewhere around 4.5%. The same product in a variable is 2.5% or so.
Right.
Okay.
You can't get a fixed for less than 4%.
You cannot get a fix for less than 4%, basically.
Really? That
right
surprises
now.
me. Wow.
Yeah. And the Bank of Canada is going to continue to increase this key overnight rate. I think that we're going to see some increases over the next 12 to 18 months, Todd. So Canadians are going to weather some storms. If you're currently in a variable rate product, don't convert into a fixed. Bankers and mortgage lenders are salivating for you to come in and convert. They are just rubbing their hands together. And every time they convert a variable rate customer into a fixed,
yes,
they basically go to the back and they ring a big gong because they know that consumer is going to pay more interest, which is going to put more money on the bottom line of that financial institution. Consumer, the Bank of Canada will bring the key overnight rate back down when inflation is under control. Some economists think that we're going to be in a recession. And what happens during a recession? The government wants Canadians to start spending again. But they gave a very sharp message during the last Bank of Canada meeting that Canadians need to start saving their money and stop spending it on consumer goods because that's what's increased this inflation. I went to fill up my SUV the other day at the gas station. Everyone knows I drive a big SUV and it cost me $177 to fill up in diesel.
Wow.
And I don't even remember in my adult life spending more than $100 to fill it up, Todd. So obviously we know inflation is a thing. I get groceries twice a week. Normally it's about $100 per order. Now it's almost $200 an order. The 0.25 and the 0.5 increase of the Bank of Canada is the least of our worries right now. Obviously it makes a difference to your bottom line.
Yeah.
We're in variable rate mortgages. I believe about 60% of our clients are. So it is having an impact, but it will get better. And I think that's what people sometimes don't really understand. They hear about these sharp increases, and this last increase that we had was the biggest increase that the Bank of Canada did in the last almost 20 years.
How much was it?
50 basis points, so 0.5.
Right. So let's try and translate this into some real dollars for people. Let's suggest somebody has a $1,500, or let's simplify it, $1,000 mortgage.
Yeah.
Okay. So that
are we saying like $1,000 a month or $1,000 biweekly?
Well, okay, $1,000 biweekly, whatever it might be. Because that would be probably more
average.
Realistic. Right, average, right. So $1,000 biweekly. The interest rate goes up by what again?
50 basis points.
50 basis points. What does that translate into real dollars out of a household income?
Probably on a monthly basis or a biweekly basis. Like we're looking at a month.
Yeah.
We're talking maybe like $75 a month.
A month.
It depends, obviously, on how much you owe.
Right.
It's
based on the $1,000 biweekly.
Yeah, and it's going to have an impact. If you have an adjustable rate mortgage, it will have an impact.
But the stress test was designed to deal with all of this, was it not?
Exactly.
Yeah.
And if you were to convert that variable rate mortgage, and a lot of consumers have variable rates at prime minus 50, prime minus 80, prime minus 100 or more. If you convert that into a fixed at 4 point something, you're almost overnight doubling your interest carrying cost.
Why would anybody do that? Bad advice?
I think sometimes people are really getting excited about what's going on in the media.
Yeah.
I hear on the radio station, we talk about, interest rates and what's going on in real estate all the time. So I think that's a concern. I think that people are amped up on inflation and they don't understand the mechanics. I think some people took a variable rate mortgage because it was cheaper, but they need to understand that it varies. It is going to go up and it is going to come back down. But if you convert into a fixed, you will pay more money. You'll pay more money today and you'll pay more money for the term. We don't have a crystal ball on what's going to happen, Todd. But I'm hearing, rumbling, and it's in the news that things with Ukraine maybe, on the upswing, that maybe things are going to start getting a little bit better, and that's going to come to more of a resolution. So that will have an impact. Inflation is not necessarily a runaway train. I think with the last increase that the Bank of Canada did, Canadians have started saving. They've stopped kind of some of the spending.
Why do you say that?
In Ontario, they've actually seen some, home prices soften a little bit and transactions soften because the cost of borrowing is higher.
What about some of the moves, sorry to interrupt you, but some of the moves that have been made by the federal government, and I can't remember what some of them are off the top of my head, but one of these, something about blind bidding, and there's foreign buying has been curtailed. Are any of these going to make any difference at all, in your opinion?
I do not think it's going to make a difference here in Halifax or in Nova Scotia or Atlantic Canada, but it may make a difference more in Ontario. So I think our listeners in Ottawa, that's something that you may see to be a little bit more of an impact. CREA put out their stats here for the month of April, and obviously we're keeping a close eye on what's going on in Halifax. The average house price for April in Halifax Regional Municipality was over $600,000. And if we even look back a year, our average house price was about $5.25, and then $5, and then we certainly we've seen some significant increases. Our home prices are up about 30%. Is that sustainable? Probably not. We've never had double-digit growth here. Our growth in our prices here in Halifax typically have been like 1%, 2%, 3% per year.
Is there a housing bubble?
I would say
question,
that
I know
that's a hard question. Yeah. I don't think it's a bubble as much in Halifax. Maybe in some other areas, maybe so. Our real estate is still very reasonable compared to other areas of the country. So, for example, in Halifax, with our average house price of $600,000, I'm sure some of our listeners in Ottawa would jump on an airplane, train, or automobile to be able to buy a single-family detached home for $600,000. The average house price of a detached home in Ottawa, I heard, is now over $900,000.
Right.
So we obviously are significantly less than obviously what's going on in Ottawa and a lot of different areas from across the country.
So the bottom line is you don't feel as though we are in a bubble here.
It will take 20 years, I think, for this bubble to resolve itself.
20 years.
We don't have enough supply.
Yeah.
Currently in April, real estate on average was on the market for 15 days in Halifax. I think a balanced market might be more like 60 days or 120 days average. At 15 days, the market obviously is still overheated. Do I believe that it's starting to be more balanced? Yes-ish. I don't know. I know ish is not like a very scientific situation, but I think that we're getting more into a balanced market, and we'll get on into more of that when we come back.
Okay, a Mortgage 101, your guide to home ownership with Clinton Wilkins and myself, Todd Veinotte. We'll be right back.